So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities.
Greetings from our channel. Raoul Pal, the inspirational CEO and founder of Real Vision, is the topic of our spotlight today. Raoul Pal is well known for his extraordinarily optimistic long-term forecasts for both Bitcoin and the cryptocurrency sector as a whole. In the next 6 years, he sees Bitcoin reaching an incredible $1 million per coin, which would push the whole value of the cryptocurrency industry to an unthinkable $1 trillion. The cryptocurrency market has emerged as a powerful force despite being relatively new, surpassing even traditional investments like equities and bonds, which typically provide only modest annual returns of 10 to 20%. Investors in cryptocurrencies, however, frequently see these profits in a matter of minutes. As we explore Raoul Pal's extremely optimistic forecasts in this video, along with more information from his most recent interview with Squiggle DAO, please take a time to like this video, subscribe to our channel, and enable post notifications for future content like this. Now, let's hear what he has to say.
Firstly, decide what your time horizon is. It's the single most important thing. Most people, I can see it already scared of the down cycle to come because they've all got PTSD of the last one. But if you want to go to the OGs of this space, the Dan Moorheads, the Wences Caceres, all of these guys, they didn't. They just rode it and added into the down cycles, and they've compounded massive wealth. Massive wealth. And there's many people who are not public who've done the same. But most people fear the downside more than thinking about its opportunity. Even though it never feels great, I was excited about it in 2022 because it meant I could add to my positions at great levels and compound. So then you get back to an all-time high much sooner than everybody else who's just done nothing. So that's really interesting. And so time horizon is super important. If you just don't want to deal with the downside because your psychology doesn't allow you to do it, that's fine. You need to really think that thing through. Now, what happens is people lose their minds in a bull market and in a bear market. In a bear market, they get rid of all their tokens. They say, never again, this is the worst thing I've ever done. And in a bull market, they end up buying too much. And really, to not up the movement from 2.5 trillion to 10 trillion to 100 trillion is to own the highest quality assets and do nothing. Now, we all have an inner degen somewhere within us. So allow yourself a bit of space to do that. You know, I've got positions in dog whiff, hat and bonk and, you name it. But when I look back in my portfolio, it's probably 1%. But I look at it on the screen all day. I'm checking the whiff price all day. It's ridiculous. It's 1% because the rest is just a buy and hold long-term position. And then I see a lot of people trying to be overly cute by saying, oh, I'm going to own this underappreciated crypto like Cardano or XRP or whatever. Fine. But you're taking a risk that they're not going to appreciate the same as the proven assets. Now, the proven assets keep trending. If I look at the compound rate of growth, the annualized rate of growth, Bitcoin's 150%, ETH since 2012, ETH is 180, about 160, 70%, something like that, since 2015, 16, and that's per year. I mean, this is bananas returns. And then Solana's like 200. And that was a snapshot in February before. I mean, many of these aren't at all-time highs yet. So the returns from just owning the top assets is so good. Now, I also understand that a lot of people may only have 10 grand worth of savings. So they think, well, even if Bitcoin goes to 1 million, that's a 14x. So I've got 140 grand. Can that even get me a deposit on a house? Is that a retirement saving? I get it. So people really want to take more risk, but just do it intelligently. And that's how not to this up. Because if you turn your 10 grand into zero and you do it every crypto cycle, which many, many, many people did. The NFT cycle destroyed a lot of people, and a lot of people got destroyed in just all of the kind of super early stage speculative stuff. We've all got wallets of shame, so it's not like any of us are any better. We all have the wallet of shame. And don't use leverage as the other one. The other thing that people tend to do is they love getting a yield. I don't see the point. So yields have risks. They come with a risk. Even staking yields, it often means if you're not liquid staking, you've locked it up. If it's liquid staking, there's the risk of the platform, of Lido or whoever else going under, or something happening, right? Something unexpected. And in crypto, something unexpected always happens. Having leverage on a 70% volatility asset class is a very, very dangerous thing. Most likely, you will lose control of your coins. Your one job is not to lose control of your coins. That's why storage is super important. Your one job is not let go of your coins. Keep it for that 5 or 10 year bet, and your future self will thank you forever for doing it.
Playing the long game is Raoul Pal's winning strategy for anyone hoping to take advantage of the potential in the cryptocurrency business. Stay clear of debt and make sure a sizable component of your portfolio consists of major cryptocurrencies like Ethereum, Bitcoin, and Solana instead of concentrating on risky assets. Pal, a former executive at Goldman Sachs, highlights that utilizing leverage is a guaranteed way to blow your chances and lose out on what he believes to be the greatest investing opportunity ever. Pal also thinks that a significant technology revolution is about to occur that will completely transform the world of finance. He cautions that before the world truly changes, we may only have 6 more years to take advantage of these amazing chances. Pal claims that while the rest of the world tries to adjust, individuals who seize this opportunity will be able to relax with significant benefits. Here are some other snippets from his insightful speech.
I bought Bitcoin at 200 in 2013. It went up to 1,000. Then it collapsed 87%. But I had a long-term time horizon. I'm like, fine, it's an option, whatever. I didn't put a huge position on, but it was decent enough. And I just didn't look at it for a while. I followed it, but I didn't worry about the P&L because it's like the bet goes on over time. It's an option. And eventually I sold out mistakenly in 2017 when things were starting to get crazy. I was up 10, 12x, and it was 2,500. They had the Bitcoin forking wars. I didn't really understand what was going on. And I wanted to be clever, overly clever. So I took profits. I thought, I am clearly George Soros. I've just made a 10x and, wonderful. It went up another 10x in the next 6 months. I mean, people don't remember 2017. They're still scarred by the last cycle. But 2017 was wild what happened at the end of that cycle. So, it went from 2,000 to 20,000. Then fell 85% again. And I didn't get back in until that sell-off after COVID. That was my signal, and I got back in. Traded well. Bought the down 50% period, everything else in it, locked and loaded, massively got a much bigger position than I did the first time around, and have been in ever since. I went back, and I should never have done this. I went back and said, I wonder if I just kept my original position and did nothing. I'd have done 5 times better. And then I thought, okay, what happens if I did what I was supposed to do, which was, let's say, double that original bet that wasn't so big that you couldn't do that. Just double that, just add that same amount in within 40% of the low. So you're giving yourself tons. I'm not saying, you're going to catch the low, but you got 40% wiggle room to somewhere get around the low. So that's dollar cost averaging around in a bear market. I'd have done 25 times better because that's compounding. And that was a stark lesson to me. My working thesis now is you've seen me post in the past charts of the adoption of crypto. So we use active wallets. Now, we know they're double counted, but we're comparing it to the internet, which was IP addresses, which are also double counted. So it's fine, right? It gives you the rough rule of thumb. There's about 520 or 550 million wallets, active wallets out there. It's growing at twice the speed of the internet. So this is the fastest adoption of any asset class or technology the world has ever seen. Technology side's just been beaten by AI, just because Microsoft and other things can install it everywhere instantly. But it's massive because it is an asset and AI is not an asset. So if you just extrapolate that chart, you get to 1 billion users by the end of 2025 and 4 billion by the end of 2030. Okay, that's half the world. Okay, so what does that mean? Well, you can also take the log chart of Bitcoin and just extrapolate out into the future, and you can see the trend rate of growth, the exponential trend over time. So it gets to somewhere like $1 million, and what happens is the space goes from 2.5 trillion, where it is today, to, let's say at the end of this cycle, 10 trillion, maybe 12, maybe 15, depending what the cycle's like, and then on to 100 trillion, which is the size of most of the other asset classes like equities. In fact, most of them are larger than that. So that movement from 2.5 trillion to 10 trillion to 100 trillion is the trade. And that also happens to be the fastest, largest accumulation of wealth the world has ever seen. Nobody's ever seen anything like this before. It's an equivalence to the entire baby boom generation entering into financialization, buying stocks and stuff like that, plus the opening of China to the WTO, plus the Iron Curtain coming down in Russia. It's of that magnitude of wealth generation in one short period.
Raoul Pal reflects on his Bitcoin journey, starting with buying Bitcoin at $200 in 2013. He experienced the roller coaster ride of its price surging to $20,000 in 2017, then crashing 85%. Despite mistakenly selling out during the frenzy, missing out on further gains, he re-entered significantly during the COVID-related market downturn, learning a valuable lesson in hindsight about the power of holding and compounding investments. Looking forward, Pal emphasizes the unprecedented adoption rate of cryptocurrencies, comparing it to the rapid growth of the internet. He predicts 1 billion users by 2025 and 4 billion by 2030, highlighting the exponential potential of crypto assets. Extrapolating from Bitcoin's logarithmic growth chart, he sees a path where Bitcoin could reach $1 million per coin, driving the overall crypto market from $2.5 trillion today to potentially $100 trillion. In conclusion, Pal frames this as not just a financial opportunity, but a historic wealth accumulation event, comparable in scale to major global economic shifts. This perspective underscores the immense potential for those who understand and stay committed to the long-term growth of cryptocurrencies. Until next time, don't forget to like, subscribe for more videos like this.